Hi guys, Johnny here, Mr. Forex Fire. Let's have a look. We'll have a quick look at the charts and see where we are. Just going to share the screen. I hope you have all had a good weekend. Go into here, maximize that. Get my lovely Geordie face in the corner. Right, so we've got the 1 hour go down to 15-minute. The Euro USD, as always, is what we're working upon. We can see since the markets were opening the other day, we've had some areas have been met within our supply and demand areas. Again, I'm just going to make a couple of boxes just out of my preference. Make that one there. We've got one that's going to slightly nest inside, and if you look, it's more or less 50% of a mitigation. So this could be an area of importance. Again, we'll drag this one out. And we already know, obviously, to the higher side, we've got these orange lines on the top. Orange lines on the bottom have been met on the general bias. These ones in here have been met to a certain extent. However, we have come up and we've got that massive down before the up as well. Look at that, that's more or less 50% mitigated into there as well. So I'm just going to keep this orange line as a possibility at the moment. We'll go down to 1 minute. And there's nothing much happening at the moment. Just get the goalposts on. Yeah, 30. And remember, guys, we do this. We set our goalposts because we're giving ourselves 2 hours of trading time. Personally, for me, I've been seeing huge success with this because I'm setting myself an allowance of time to trade. If I get a trade, happy days. If I don't get a trade, it's just what it is. I won't stay until I get a trade. I won't go chase some price. So there's our parameters. We've got 2 big swing points. Okay, we've got this and we've got this. And in all honesty, I would want to see one of them broken, to be fair, before I would decide that I would possibly get into it. We have had a break of structure anywhere from there. If we just mark that out, we've got the break of structure. And again, we're going to be going into paper trading stuff and that as well, how we can use paper trading on your charts on the trading view. So with this being a break of structure, there is a possibility of an entry up on the higher side. Okay, if you go short and you do it from that there, to be fair, and then back down to here, or even to the break of structure, you could do to 1 to 3.4, down to that as a 1 to 5. Excuse me. What we'll do is we'll keep that as a possibility at the moment. Okay, we'll leave that there. And what we'll do is we'll just say, right, there's a risk of 1%. 1% risk on this occasion. Okay, so I'm just going to keep that open to there. Let's take a look. Do that. Do that there. We'll keep that open. I'm going to pause the video. We'll come back in a bit. We're going to let price within this area at the moment do what it needs to do, and then we can look at it. However, do what we normally do by scrolling out and get the path and mark your swing points. Okay. this is just allowing us to mark up a higher time frame, if this makes sense, on top of this lower time frame. You want the definitive swing points. Okay, you've had a break a structure there, down to there, up to here, down to here. It doesn't have to be specific, but if you get it as close as possible, if you watch this, and again, I'll go over this on every video, you've basically now got a higher time frame price action, and then you've got your intermediary price on the bottom. Okay, so if we go to the 15-minute, you'll see what happens is the time or the time frame sort of starts to compress into here. So then if I take it up to the hour, you see this? Down, up, all the way down to where the green is, red, green, back down to red, green, red, green. Maybe we don't really need that one in. You could do it up to here. You got your red, and then you have it. So you've got your 1 hour time frame. Okay. So basically on these, you're possibly looking at how you got a channel down here. You normally get 50% respected on, let's say, channels like that there. Okay, you may get a return into here. There's 50% on the orange line, as I said. We've got like the swing, the pullback when we go to ABCs. You'll probably see that on my other videos. We go down to the 1 minute. We'll factor this in. You can see a lot of consolidation as it's come down from the downtrend into here. Okay, and this may very well head back down to here, breaking this structure. If we get, which is a good thing, I suppose, if we get this heading down and it breaks this structure, that's good, because then we'll just use the playbook for the order block on the top side. But we'll just see what happens. I'm going to pause the video. We'll come back in a short while and we'll take it from there, guys. Okay. So we've had some movement, guys, from the half yet. It is now, what, 9 o'clock the hour. We're getting some double tops, double bottoms. So I suppose at the moment we're going to move the risk down to here. We've got to break a structure here. We're waiting for a breakout of possibly that there. We'll see what happens if we're either going to get a push out here or a push out to here, because we've got, like I said, double tops, double bottoms. We've got liquidity residing both ends, to be honest. So just like I say, we're gonna, as always, as we go along, we like to do structure. Okay, we like to mark the charts up, or at least if you're going along with this as well, you should be marking your charts like this on your 2 hours that you have. And the reason why you do this is simply because, one, it helps you identify structure. Two, it also helps you at the end of your session of the 2 hours to look back on your chart. And one of my top tips as well, again, is to scroll out like this and then possibly up to the snapshot, and then copy chart image and save that to your trading journal on your desktop, a little diary, a notepad, and then you put on the date that the session has been. So we've got the 12th of October, and then put the time frame, which is 1 minute. The pair for me will be Euro USD, and then put in the time, the allotted time that you have, and then have it as a screenshot. So then you've got something to look back onto as a picture from your start to your finish, with everything that's happened in between. Okay, if that makes sense. And if needs be, have a little text document alongside what you're doing to complement the actual screenshot, and write down things like how you were feeling on that day you were trading, how your trades went. Did you feel anywhere where you obviously you wanted to get back in on a losing trade? How were your emotions, basically? And it just helps you identify things on a day-to-day basis. And then when you look back, and I implore you to do this, when it gets to the end of that week and you've got all of that documented for the diary, when it gets to the Saturday, maybe it's a Saturday afternoon, tea time or evening, get yourself a nice cup of tea or coffee or a glass of wine, sit down and look at each day that you would trade and look at the screenshots, learn and look at structure that you've drawn out. And it just helps you identify, one, structure in itself, and two, it also helps you identify movements within that pair. And believe me, when you collect all this data over time and time goes on, you will start to see regular patterns within how, after swing points, you may see how these double tops, double bottoms sort of play out. You may see how on a pattern, certain candle formations at a certain pattern, what happens afterwards. And then everything just starts to lift as a fog, and you start seeing things, and you can anticipate what the next move is going to be based upon the structure, the pattern, and the pair that you are trading. I hope that makes sense. That's my little bit of Forex Fire Value golden tip for the moment. What we're going to do, we're going to pause the video, and we are going to wait for a breakout of one of these liquidity areas at the moment. We still have this one residing as well. So we're going to pause the video. We'll be back in a second. Hi guys, so there's nothing really shown as such for me at the moment. However, we still keep this one live. We can see on here, there's liquidity residing on the double bottom here, double top, a break from the double top. However, as we've gone up here, we've had a liquidity grab. You can see if we scroll in, there was a liquidity grab from here to here, just a tiny amount. So for me, what we're going to do, we're going to risk a little bit of a trade here before we go to the upside. Okay, we're going to risk this to come back down, okay, to hit our order block on here. I've moved the order block up a slight touch, so we've got a run out to just over a 2 pip stop. From there to risk a reward of 2.43. We'll see if this enters and gets us in before it goes to the top side. Again, what we're going to be doing with this, for now, it's just risking 1%. There's something I want to do structurally. Excuse me. Something I want to do structurally going into these next few weeks, because again, I wasn't going to document these again. I think I may do, because it's something I want to work upon on risk to reward and to test something. So I've still got 2 trades there as a possibility. We've had the liquidity grab on this on the downside. However, when you look, there's still liquidity here as well. Okay, so it's a bit of a risk, We'll see what happens, whatever enters first, either top side or come back down to the bottom before going to take back up on the top. But overall, guys, what we're looking at is, because we've got that high down to that low, that's the range that we're in at the moment. And at this time, the Euro USD is just not showing anything. And I'm not going to swap around and change my times of day of trading, simply because I've done this for the last 4 weeks. And for them 4 weeks, we had a growth of 39% growth. Again, working upon parameters of asymmetrical compounding. If I'd done that structure to that growth, that 39% could quite possibly have been around about 115% growth. So that's something I want to structurally test and put towards everybody at the moment. But for today, unfortunately, we've had the push early on, just before 8 o'clock, We've had that drive down. There's nothing really came back in. And as you can see on here, it's just been all buying power, selling power, sorry. I'm just going to get rid of that, because what we can do, we can drill in and have a look at current price action. And you can see at the moment, obviously, wick to wick, we have imbalance here. Again, let's just get these imbalance areas drawn out, wick to wick. So there's price and efficiency on the way up on this drive out of this breaker structure, if that makes sense, because now that's been hit. Now we've taken that out at the moment. Price might want to come back down to mitigate into these areas. Hopefully, though, hopefully we'll get a reaction just below this area. Maybe that is the target area to go for before the initial drive up. But I'm going to leave it as it is. We've got two imbalance areas here. Again, I'll just get these marked up. It's imbalance. And again, that's also imbalance. So there's two imbalance areas from that aspect. And you can see as we're coming down from here, a lot of selling power. Wick to wick, drag that out. That's imbalance there. Wick to wick. That's imbalance there. It's come up there. See that? Again, you can't make this stuff up, guys. This has mitigated beautifully into that imbalance area. Obviously, anything below this area has also sort of mitigated. So I'm going to pause the video. We'll be back in a second. So we're back, guys. As you can see, going on what we were speaking about, imbalance, the wick to the wick will come in. It's respected 50%. Now, I always go on about 50%. 50% is always a very high magnetized area for sort of price to return to mitigate on, to be honest. Again, you could go into quarters as well. They're very powerful, but most of the time, the heavily sort of respected areas are always 50%. So we might get a drive and a push up to the higher side. If we do, that's okay, because we are looking at this longer term. Here we've got some imbalance here, and we've already mitigated the imbalance on here. So again, that there's been met. We have price inefficiency up inside of here, because obviously there's imbalance. To a certain extent, price has been met in here because of this. And again, it's always good to mark these charts out, so you've got something to look back onto, okay? Like I say, at the end of your session. And you can sort of look at these key area points, and for yourself, for me, I know whenever I've got an X, I know that the price has been met in these areas, okay? I know when I've got the dollar signs, there's still liquidity or monetary value there that could be taken. So at the moment, we've got three key areas. I've got one down the bottom, one here, one on the top side, but also the entry level up on here. I mean, this is not liquidity as such, but this is the order block that I'm looking for, the up before the down. But I've increased the pippage from this actual block here. You could tighten that up if I'm honest with you, but I'm happy with the two and a half pip stop loss, to be fair. We'll see what's going to happen with price. It looks like it's going to break this structure soon. If it breaks that structure, okay, if we break that structure there, then what we'll be looking at is possibly a quick entry, which will be from here up to where the break of structure is. Okay, so we're going to come back in a second or two. It might not be too far away. Again, there's nothing much happening today on the pair that I look at, which is the Euro USD. But again, I'm helping my eye and my sort of look on the charts by drawing out the structure. And again, I can't see this enough. Okay, guys, as much as you want to get in on a trade, as much as you want to activate a trade, doing this is far more important and imperative to sort of drill in, lock down, and understand the structure and the movement of what your price is doing, for then you to understand patterns, reactions, formations, and then understand when you see certain things forming, you can see, well, hold on a minute, I know when I've seen this double bottom, double top, or a harmonic pattern, or a swing point, or a pin bar reversal, I can identify that action and what normally comes after it, because with different Forex pairs comes different sort of movements in price, and all of that comes with time, comes with practice, and comes with the understanding of what's happening to your pair that you watch. I used to, back in the day, I used to watch all of these. You'll see here, purple list. There was just no relevance for me to do this. Cyan list, we've got pink lists, we've got purple list, again, orange list, blue list, and I used to just be hopping on any pair just for the sake of looking for a trade. I cut all of that out now, because that was the way I was taught back in the day. I was taught when I was part of another group, look at this, look at this, look at this, set your alarms, and then all of a sudden your stupid trading view would start going ping, 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 and you would forget what you had analyzed prior to setting the trade. And I know you can set comments and whatever else have you, but the other groups I was with it was disorganized chaos, if that makes sense. Doing this, staying structured, staying with your goalposts is a much cleaner, far greater, much more disciplined approach. And I just wished I'd found this way a lot quicker than what I have done, to be fair, because this has helped me no end. Again, what we're waiting for at the moment is either a break on this here to have this as our order block, or we're going to wait for this to come down to mitigate all of this here, to jump in on this, to come up to give us the risk to reward of 1 to 2.43. If we get the break of structure that we are then anticipating, obviously this to be mitigated, or even better, the higher end on the price to come into effect, for then to come back, push down to the lower side. And again, don't let this bigger one put you off, because simply, as I said before, from here down to here is just simply a range or a swing point, which at the moment is keeping it trapped, the price trapped. Okay, whoop, let's get this right. It's keeping the price trapped, if that makes sense. So all of this is consolidated within this price movement at the moment on the drive or the impulse. There is only around about 14 pips of movement in that. Again, we are just waiting for swing highs, swing lows, intermediary price to sort of show its hand on these longer term sort of pushes, and liquidity to be taken to then return back to a lower side order block at this time, which is this here. So I'm going to pause the video. We'll be back in a second. Hi guys, so again, we are not chasing price. We have got two entries here, okay, and we have come down the imbalance, okay. So what we've got there, we can get rid of. This here, we can clone. The imbalance has been met. Okay. to come down with just a pip off. And if you look, if you look on here, okay, we were around about a pip or a pipette of entry. It shot up. It would have been to take profit. So we've just missed out on a 1 to 2.43. However, we are keeping this active at the moment because it may still activate and go back up to the top. All we are seeing is liquidity is forming up on here as well. So we'll keep this live. We'll see if this is actually going to get us in on the trade going into the back end of the session today. We've got about half an hour left, but we've just missed out on the area here, and within 2 to 2.5 minutes, it could have been in and out if only we'd had something along the lines of that. That would have been a 1 to 2. But again, not to worry. This is the parameters. We've just missed out on a 2% growth, but I'm still going to keep this live. We've got half an hour to go. We've got the charts, and at the end of the session, I am going to look back on the chart and document things on my findings and things like that. So again, we don't worry. We want price to come to where we expect it to. Okay, so I'm going to pause the video. We'll be back in a moment. Hi guys, again, I just want to show you the importance of these imbalance areas. This has turned out to be a bit more of an educational lesson than trades coming in. If you look at this, I set the imbalance area so to come in, it's come up to more or less mitigate the area, it's come down, and it's sort of filling the contracts, and then it's shut off again to take off. However, we have now taken out liquidity there as well. So I'm just going to sort of clean up the charts as such, okay? Because now we've got areas that have been met. And just setting these areas is going to help you identify everything, if that makes sense. And now we possibly have a block there. Go to, I would have the risk to run out here. 237. I'll possibly just have it above there, to be fair. Risk 1%. We'll see if we can get in on this trade. Again, let's mark up our imbalance areas. There's a huge imbalance area slap bang in the middle of it. I think this might be a drive of price. You can see we're heading up towards the imbalance area here. But also we're going to start heading up towards the higher side price up on the top of that. Makes sense. Let's see if we get our drive. We are still within this whole range. It's been in this range since we started the session at half 8. There's the mitigation of the halfway point. Again, can't make this stuff up, guys. As I keep always saying, can't make this stuff up. Very powerful are the 50% areas of anything that holds structure. Okay, so I'll say that again. Anything that is based upon a structure-wise, 50% of that structure, whether it's a pattern, a formation, even down to the singularity candle itself, 50% of those areas are magnet areas for price to return to. Okay, so again, that's your price range at the moment. I'm going to bring that back in. I'm going to get rid of that just so we're going to free up some space. I'm going to get rid of that. And I hope you're getting at least some sort of little bits of snippets of value on here. At the moment, we're going to see if we can get the price to drive us down onto here. Give us a 1 to 2.26. Again, this is mitigated beautifully into that sort of area. From there, got the fire zones. And you can see it is more or less slap bang in the middle. Let's get rid of that. I will see what happens with price. We've got literally 10 minutes left. We'll see if price comes back down to mitigate into anything, and then we'll have a final conclusion at the end of today's session. And as we speak, we can see, obviously, the big imbalanced area has been fully mitigated. So it's either going to do one of two things. It's going to push and go to the higher side, or we may come down to mitigate the order block area before you get the push up. So again, as we structurally sort of play things out, you've got lows, you've got higher highs, you've got higher lows, you've got a higher high, and now at the moment we've come in to mitigate the area of the imbalance, and then we've got a higher low. Okay, so now as we've inside of the big range still, we can see we've had consolidation. Okay, so one, you've had the drive down. Okay, let's just get that nice and thick. We've had the impulse. So that's the impulse drive. Okay, let's get this at the top center. So that's the impulse. Okay, this here has been consolidation. Okay. That's your consolidation period. And now we are starting to see an uptrend reversal. Okay. Trend reversal. See if I can get this. Bottom. We're now starting to get a trend reversal from what we started off on this morning. So again, hopefully we'll come down and mitigate into this order block. We've had a breakout of the imbalance, so we may get a push down. Okay, so again, we're just going to put this here. Hopefully we'll get a touch entry and then push up to the high side. In all honesty, we could go up to a 1 to 3. Okay, we'll have a 1 to 3 risk to reward. See, we'll get the touch entry on there. Again, my sessions end at 10:30. Okay, my sessions end at 10:30. However, we will manage this trade, see if it comes in and goes back out. I'll keep you guys updated on what happens with that. But at least when we look back on today's session, it's so imperative, it's so important to have your goalposts. Okay, even if you don't get a trade during that 2-hour session, you are going to highlight your areas of importance, your POIs, your point of interests. You're going to put your structure in place. And at the end of the session, you're going to be looking at what's happened, what's played out, and where we are. Okay, so we've still got 5 minutes. I will come back with a conclusion. We'll have an overall look at what's happened on here, and then we'll have a chat, guys. Okay. There we are, guys. So again, this was not a trade because we were coming towards the end of the session. However, it did end up going into the half past. I wouldn't have gotten into this because it was getting so close to my finishing time. But we'll see what the outcome will be, and I'll keep you updated on it just to see what happens. But overall, picture-wise, what have we got? So as we were coming into the half-8 session, we had a range on here. Okay, a low to a high. From there, the high to the low, we broke structure of this here. Okay, so that gives us an impulse drive. Okay, so that's number one. That gives us an impulse drive. So that gave me an order block on the top. At the end, that gave me that order block on the top as an entry, and the breaker structure of this which would have been another big impulse drive for the bigger picture. From there, going into the session at the start, okay, you've had the impulse, then we had a consolidated zone, which took us most part of the morning. So we got a high, a low, and then we had double tops, double bottoms. After the halfway time, we like sort of pushed out, made a high, taken out liquidity here. We can see that there's actually been taken now. So because it wasn't within my time frame, again, that wouldn't have been taken. So again, I was going to risk 1% on that because it was coming in right on the end. I would have cancelled the limit order. Okay, so from the consolidation area, we began again the low, the higher high, the higher low, the higher high. We are now ended up with a little bit of a trend reversal coming out. However, once again, liquidity was residing on the lower side here. Okay, there's been what we call a break of structure, and price hasn't behaved that much well for us today. So again, took out imbalance areas. Imbalance area met perfectly there. Now, if I was to get in on it on a trade now, I would be looking at something along the lines of here, protect the higher high, and then not break a structure down to here, maybe a 1 to 3. Again, I won't be trading that, but that is something that I would have been looking at. Okay, so again, my name's been John. We're going to go to a chat in a moment. We'll just stop a share. Yeah, it's a bit bigger, right? So yeah, overall, we've gone into a new week. Didn't trade yesterday because I was at hospital, unfortunately. Again, there was a holiday in the US as well. Today, price action upon the movement on the pair that I do watch was, we did have that swing point, but it went into the consolidated zone. But this is where your self-discipline comes into things. Again, you are trading, okay, to make profit. Okay, you're trading to make profit, and the only way you're going to be profitable is understanding when the markets are not giving you or not moving the way you expect. Okay, and that this morning was one of them days for me on that pair. I knew it wasn't doing what I was not so much wanting it to do, but it wasn't coming to the areas of structure or POIs that I had drawn out. Now, this is why it's so important as you are getting the structure points and you're seeing the structure points, you draw them out, you identify them, you mark them as your point of interests, and you can see from when we had the big impulse just before the session starts, we come out of that impulse, a little bit of a pullback, and then we started getting into that consolidated zone. Okay, from there, that consolidated zone took us to halfway through the trading session, or my trading time, and then we started getting a reversal out. There was a breakout, started creating a channel. Unfortunately, heading towards the end to the half 10 cut-off time, there was a trade that looks as if we could have entered, but I wouldn't have executed that because there was only a couple of minutes left of my trading time. I do religiously just do my time from 8:30 to 10:30. From there, I won't look at a chart again for the rest of the day. I just will not do it. I might do some help within the Discord channel that I've got, which is here, or I might sort of look at someone and mark someone up for somebody that's wanting a bit of help. But my trading, my style, my strategy, my plan is that is all I'm going to give to the markets. Because if you give that and then you think, well, I'm going to look at this, I'm going to look at this, it's broad, it's opening up more risk to yourself, if that makes sense. The more you're keeping yourself open to looking at the charts and looking at hopping on different pairs because this isn't showing you anything, you are intensifying your risk factor, okay? By bringing the the concentrated area down, your risk gets minimized with that as well, if that makes sense, okay? So you're structuring yourself and giving yourself a plan to, instead of the big box like this, I'm going to be the charts all day, I'm going to scalp, I'm going to look for this, I'm going to look for that, I'm going to look for long term, I'm going to look for reversals. No, put your goalposts. That is where you are concentrating on your trading for that day. Look for structure within that area. If price does not come to the marking of your structure points, there's nothing wrong with that. You are just then having a lesson or a day of analysis, if that makes sense. And at the end of each video, or at the end of you record yourself, at the end of each session, again, I do advise everybody to go back, go to their charts and look at how things played out, read from the structure points you've put, and look at the identifying markers on here, like your imbalance areas. How was it met? Where did price come to? Your breaker structures. Because the more and more you do these sort of things, believe me, the easier it gets, the quicker it becomes, the more confidence you will get, the consistency will come, the profitability will follow. Because I always work on 3 things when you're trading. You're going to work on your confidence, you're going to work on your consistency, and those 2 come hand in hand when you do what I've just done there today. Yes, I have not getting in on a trade. Yes, I've not made a trade today. Does that bother me? No, it doesn't, because I have structurally done out my chart and I've learned that my confidence, because I've done them imbalance areas. I mentioned imbalance was going to come back in 50% and things, and I do this in front of your eyes each and every day. If during the session a trade comes in and it activates, and whether it fails or whether it goes to the TP areas, happy days. We learn from what's happened within the movement of that small allotted time of the trade being executed or coming into play, and then it just adds to the bonus of the lesson of what I've done today for everybody. So don't get disheartened when you set your goalposts and nothing happens for you. There's more happens for you within those allotted 2 hours than you will certainly imagine, or a lot will happen in those 2 hours than what you honestly think, because drawing out the structure points and looking at these, seeing the price play out, and then at the end of your session, you can go and have a cup of tea, coffee, or whatever, go back and have a look on the said chart, like what we've just done here. I just thought, yeah, I remember this, but we've got the impulse, we've got the consolidation, we had the reversal of the trend, we've got the higher highs, the high lows, the higher highs. Price came back down to do a break of structure on here. Yeah, and then you are identifying these areas, and this just comes when you look at a naked chart. It's like the penny drops, the fog mist just lifts up, and you can identify these areas. This is not about indicators. It's not about silly softwares. Doing this each and every day that you are on the charts for your 2 hours that I teach you, you will learn so much from just doing that. Believe me, okay? So again, today's session been good. I've enjoyed it. Nothing's ended. Again, we don't go chasing price. If we brought in the parameter of that imbalance a little bit shorter to the TP as well, we maybe could have had a 1 to 2 or 2% growth. But again, we don't worry about that. And as the weeks go on and the days go on, I'll still continue to do these. However, we're going to be sort of once and if and when we do go into profits, I'm going to be sort of bringing in another sort of teaching and implementing how you can 10x your risk to reward with a certain strategy on your risk to a certain strategy with the risk to reward to retain higher levels of profit, if that makes sense. And at the same time, it could possibly help you get towards going through the challenges as well. So my name has been John, Mr. Forex Buyer. Don't forget to give a thumbs up, a like, hit the subscribe. And if you do get value out of what I do, these sessions, and you're taking a little bit away from it each day, please hit the join button, which you'll see below the video here. For the price of a cup of coffee, you'll get so much more and you'll get inside of this stuff here. Okay, guys. So I'll see you later. Bye.